Okay, I apologize for the last video. It's kind of long and detailed and a little bit technical and probably didn't explain things in exactly a perfect kind of way. But at least we can get a carrying charge rate that's a function of various different parameters, real parameters that affect the cost. And that's kind of the hardest thing from the standpoint of battery cost or solar costs. Now, from the standpoint of diesel costs, the hard part is getting the uh, um, cost. One of the hard parts is getting the cost of diesel power and O&M costs and the heat rates and the fixed versus variable O&M costs and all of that. So that's a piece of the analysis that's pretty important. Now I'm gonna go through real data sources, not the EIA and not the IEA, but the IEA is probably a little better than the EIA, but real actual plants. What's the capital cost of the diesel? What's the heat rate and all that? Before we do that, though, we also need, unfortunately, to get uh, um, the fuel cost. Now, if you go to commodity prices, okay, I've shown you this a few times, all right, and I have not updated this. I updated this to put our little check boxes here, okay? But if you look at all the kind of commodity prices that are available, these are the forecasts that are made by the World Bank, but more importantly, these are all of the different kind of commodity price. We've got crude oil, natural gas, Europe, Japan, and US, cocoa, coconut oil, maize, wood, copper. Let's put copper. Let's put the price of copper and compare the price of copper to the price of oil. Okay, you can do all of that, and I kind of changed the format. Look how closely the correlation is between copper and oil. That's kind of surprising. Not surprising, but there's a whole lot of correlations going on. This correlation is 91%. If you could figure out the price of copper, you could figure out the price of oil and vice versa. You can't figure out either. Okay? Enough. The problem is diesel is not there. Now, if you want to find places to get diesel, you can go, and I'm using now, the problem is, of course, refineries in different places of the world have different costs, and the taxes, the tax structure might be very different on the way you tax the diesel oil that goes into your power plant. So here's what I did. I'm using U.S. data because in the they report there are a couple of ways to get the data. Now I eventually will. I'm going to do some analysis with other places. I hope. Oh, I certainly hope. Okay. Now, if you go to the EIA, the U.S. EIA website, there's something called a short-term forecast. Now, this is kind of a mess because, and I better do a freeze pane on this one. Okay. They changed the format, but they give you, every time they make a forecast, they give you a history. So they give you the price of oil here, and then somewhere else they give you the price of jet fuel, which is in a US cents per gallon. They give you some retail prices, and finally they give you the cost of distillate oil or the cost of diesel on a US dollars per MMBTU basis. And yeah, you get it. Here, I got it from month by month back to about the year 2008. Okay, so we just make a little graph as usual. How about we'll start here, shift control right arrow a couple of times, F11 or alternate F1, and there's the price of diesel fuel. Now, just a minute. Now, what I've done, and I should have really practiced this beforehand, but I went to the battery section of our disk, and in that battery section, I put Lazard's levelized cost of energy. You just get this, of course, from the internet. It's free. I didn't violate any confidentiality. I don't think it says. Oh, it says confidential. Okay, but whatever. I think this is the latest one. And they have a cost of a diesel engine ranging from between 212 and 281, the high cost. And now maybe solar plus a battery can really help that, because you're avoiding a lot of the cost. Now, just like we did for the database, the other database, they go through the kind of conventional resources and alternative resources, and they must have some of the data, but I'm looking for the cost of diesel. Okay, and they have nice little football field diagrams with levelized cost of analysis. It all looks very fancy. And then you get down to the heat rate in just a minute. Okay, here's the gas reciprocating engine, and the fuel price they have in terms of a diesel reciprocating engine, not a natural gas, a diesel one, is 18.23. And we just looked at the graph, and right now the cost of diesel is about 10. It's a factor of 2 different. And you can look at all those beautiful graphs, and I'm sure they do a very well done analysis. But what I'm trying to show you here is you get the ability to change these yourself, and you get an ability to carefully look at some things. Now, if you want to, I don't know how it works. I've tried to study this in other countries. Tried to look at Philippines, for example, because they use diesel on the islands, and Jamaica and the Caribbean, they use a lot of diesel fuel. Oh no, get me back here. Now, then I said, let's compare just the cost of diesel to the cost of oil. Okay, and down here somewhere I did it, and I'm getting a little lost. Here's the cost of diesel per MMBTU compared to the cost of gas. My gosh, is that different. Okay, and the interesting thing really is if you compare the cost of the gas to oil, and you go up here and look for the Henry Hub 2.94, and the cost of, it's a little bit higher than the cost of gas is a little bit higher, but not much when you adjust, certainly when you adjust for the heat rate. Okay, and then over here I said, okay, well, let's just a stupid minute, let's compare the cost of diesel and compare that to the cost, the price of oil. And I did that over here. Sorry about that. And here I did our big trick. Big trick. And I said, let's make the oil on the x-axis. So this is the oil price in USD per MMBTU. And then this is the price of diesel. No, this is the oil in USD per barrel. Sorry about that. And this is the price of diesel in USD per MMBTU. And you want to blank on the x-axis. That's the big deal. You want to blank on the x-axis. Shift, control, right arrow. F11. Oh, it looks like the other one, but it's not, because the x-axis has the price of oil on it now. And you just make a scatter plot, and you can see how closely the price of diesel is related to the price of oil, and then you go to a trend line, and you can just say, let's put display the equation in r squared. Okay, that's nothing fancy. The big trick is to not have the x-axis. That's the big trick. And then we make the thing a little bit bigger, and we can say that the price of diesel is the price of oil, which is the x times 0.22 plus 0.163. Now, if the price of oil was 0, the price of diesel would be 0 too. So you could also say, let's force this thing and force it to an intercept of 0. So we'll set an intercept of 0 and display the equation on the chart. So this is really just a review. A lot of this stuff I'm doing is just a review, but that's our big trick for the x-axis for a scatter plot. No x-axis label, no x-axis label. I'm just going to say it twice, not 3 times. So that's our other thing, which I seem to be having a problem making it larger. I'll make it really large, okay? That's our, we can just say the cost of diesel is the cost per barrel times 0.22. Now, you could also just use your conversion. No, you can't. No, you can't, because that's refine. All the refining stuff and the conversion of units and everything else is in that number. Okay, and then I said, well, let's not look at the past. Let's look at the future. And you go to the, and now I have done a lot of work on, how are we doing on time? 11 minutes, good. I have done a lot of work on this, getting the futures prices. And here's, I don't understand something. They put all this wonderful stuff on the website, and then they make it a pain for you to download it to Excel. Do they do this just because why do they do that? I don't care. So we have to do a little work in fixing it. This is our website. Sorry about, kind of just making it so you can see it. And this is the general website. This is where you can get a list of all the futures. And then what I did in this page, because you really need to know if is it in US cents per barrel or in per gallon or per MMBTU. And after I downloaded the files, which I'll show you in a minute, I put our little fuel units in so we can, they're all in terms of per MMBTU, and you have to understand, I hate the way they do this. I want to understand what's on the bottom. I wish they would just show me the ratio. So I did a little work for you where I showed you what's on the bottom and what's on the top and all of these conversion factors for natural gas, steam, coal. This is all on the website, but now it's in this file as well, so you don't even really need to go and find it, or you can get those kind of numbers by just going to Google. Okay, so then we go to this website and just start collecting. And this time I collected a few more commodities. And for each of these commodities, I suppose I can do this, If we go to this website, okay, I hope this doesn't take too long. Okay, I'm going to go to the website. And then I'm going to look at, let's look at electricity futures. Okay, and let's look at this one, the PJM Western Hub. Okay, and then we look at the settlements. Okay, and then you have this thing, and I picked a horrible one because it doesn't have a settlement price. Oh, shoot. Okay, and let's go back and pick one that product name. How about this one? I'll try this one. Ah, shoot. This had no. Did I put volume? Maybe I put volumes. Okay. This is just really embarrassing. I shouldn't do this, but it has the settle price. Okay, on the ones I picked at least. All right, you go and you get the settle price. Now they don't allow you to just download this. I don't think they do, into kind of a nice little Excel file. You have to kind of do it one at a time. So I take this up here for the right kind of, you know, future that worked. I'm embarrassed. I hope I don't get one of those about a million dislikes because I opened the wrong file. But here's the one for just natural gas. I did options, so I don't want to do it. I just did futures for the rest of these. This is the on-peak NEPOOL, New England, the Brent oil price, the Pennsylvania, New Jersey, Maryland, which is a whole lot bigger, a very big market, on and off peak, Northern Indiana off peak prices. That's electricity again. Gas, natural gas, the basis for natural gas. Number 2, oil. That's the one we're really focusing on. Gasoline, coal, Gulf diesel oil, and the crack spread. Those are the kind of things you do. Now, as usual, you just make a little macro using the workbooks.open. You click on this. This time you don't have to delete everything. It just overwrites the sheets. Okay, and when you overwrite and when you do this, here's the big problem now. So this is what you get. You get a bunch of crap at the top, and we don't care about the crap at the top because we use match index indirect. We don't care, and we're able to then summarize all this price nicely. But look, it says July, JUL 2008. And then we can go to the PJM futures. And some of these have real dates. Shift Control 3. Sometimes they're dates, and sometimes they're other things. How in the heck do they do this? I don't understand this. And this July is okay again. And then this coal one, I think we didn't get. Let's look at the WTI, and let's look at that. So you go down, and this July was the same. NEPOOL off-peak futures. Same July. I'm going to find one that has a different. Here, this one was JLY. Do you know what a pain that causes to have a different date format? When I did this before, I think the date format was the same. So what I have to do is create a little master database with all these different dates, collect all the data, and figure out which date to apply. That's what all this stuff does. I have a sum NA function I had to use. I had to make up so we don't sum the NAs. So we go through and figure out which date format is used, and then we finally get everything put together. Now, once everything is put together, I put it into a different database, and I convert things using our conversion factors. Okay, and the purple one shows you which sheet it came from, and we convert the things all to MMBTU or barrels and so forth, so we can make a nice little comparison. And then you take that data. This is just, I hope, a transpose. We just take that data, and underneath this is a true false. And when it's true, it starts counting. So right now I have the, let me see, I have the Brent. Let's look at the gas futures in MMBTU, and let's look at the Algonquin credit spreads. This says, here's what's happened. This Algonquin is someplace in the U.S., and they run out of gas in the winter. And they so the gas jumps up in the winter. In the rest of the year, it's just about the same as the Henry Hub. And that's the gas. And if I wanted to also compare that, let's compare that to something else. Let's compare it to our favorite, which is our diesel fuel. And when you do this, I hope I'm not going back and forth too much and irritating people, but when you do this, I'm trying to explain how this true and false all works. So right underneath this is a little true and false. Each of these is just connected to a true and false, okay? And each of these tick marks does a true and false, so you just don't see the true and false. And then what you do is you just count how many trues you have. So we go from 1 to 2 and eventually to 3. And then you just make a counter that just counts nothing, Alt EIS enter. And then you match these two together. And that's pretty bad. I get to fix this. Oh, good. Okay. And it matches it. Okay. And I better check that the other ones are okay. Oh, shoot. That's kind of embarrassing. Okay, and I'm going to do that for all. You don't have to see all of that, all right? In fact, I'm going to pause the video. That was a little embarrassing. I try to at least explain myself. I've had to go back and change all of these things. I used to always get an entire row, an entire column. Now I limit it because it does. I found out it does slow things down a little bit to use an entire row or column, even though it's a wonderful kind of lazy way to do things. So what you do is once you get the match, this says let's take the index. Let's take the match and the index off of the same kind of counter. And then we go to the monthly database. All of this stuff we had here in this monthly database. Okay. Perhaps we color it. How about this color? And then we can, where was I? Okay. Come on. And then Shift Alternate C. Watch this not work. And I'm going to just color the sheet. Okay. And it kind of shows which numbers came from our blue sheet. And then we take the same data that I put in, and that painful thing in getting all the data right in the master database, and then we can look at our different graphs. And what I do there is just it's essentially, this is way too long a formula. I'm sorry about this. I just needed to get the NA, but all it is an index and match against row. This is column 17, and if we look at over here, this better be something like column 17, from this one. And then we take the row number, which is from the date, and then we just put our things together. So that's how you get a flexible, and the reason you need all the NAs there is because if it's NA, it doesn't show up on the graph. It's kind of like our little NA rule. Okay, now let's go back and do a little bit of interpretation before I say goodbye. I don't like saying goodbye to you, but you like it. And then, so we get all the graphs off. Now, if we look at just the kind of, this is just the oil price. This shows you it really does. The market's kind of expecting it to go up with inflation. We could even go to the annual data where I just took all the same stuff and put it all on an annual basis. Okay, and there are the various series. You can see how there's just kind of inflation in the oil price. You can go through all the theory of storage and interest rates and everything else, and what the futures price should be compared to today's price. But I think it's kind of reasonable for our assumption to take our diesel and just use this sort of number. It kind of locks in the price of diesel. It's very different than that Lazard one. I'm going to double check to make sure I wasn't misstating something, and I used the very latest Lazard study. But that summarizes a lot about how you can get all this data. I can't get it in real time. Somebody sent me an email. Can you get? I'm sure somebody could figure this out. I'm sure, but I'm just kind of scraping the basic. It's kind of basic, I suppose, what I do. Okay, I'm kind of sad about that. All right, and I'm putting this updated file on the website, and I guess I didn't open it there. So if you go to the website and want to find this file, you go to the one that says databases and downloading stuff from the internet. And up here, there is one that has forward gas and oil price. So this is gas and oil futures. Okay, and perhaps I have to update this a little bit, but that's where you can find the file. And I think it's time for me to finish.